more on how this could affect the banks. Let's bring in Bill Fitzpatrick, senior equity analyst at Manulife Asset Management, who owns shares of JPMorgan, Wells Fargo, Bank of America, and Goldman Sachs. Mr. Fitzpatrick, welcome to Bloomberg's Bottom Line. Thanks so much for joining us today.
Good afternoon. Thanks for having me, Mark.
Mr. Fitzpatrick, Lizzie was just telling us about the story that we were hearing about the banks and the foreclosures. What's your reaction to this news today?
Yeah, a couple things. Number one, unfortunately, foreclosures are going to be with us for a while, so we want to get this right. We want to make sure the controls and procedures are in place so that if necessary, you need to foreclose, you do it adequately. So I think that's very encouraging. From the bank perspective, in terms of what kind of hit they're going to take, they're very adequately reserved for this, particularly JPMorgan. So this did not come as a surprise. JPMorgan, I think, has $7.5 or $8 billion in legal reserves alone. So I don't think you're going to see a big hit to the financials strictly on the news announced today.
And we should be mentioning, because as you were speaking, it's on the screen today, we should mention that JPMorgan reporting that 67% jump in first quarter earnings today. That's solid growth. Where did it come from?
Well, the quarter itself today was a little bit noisy. For the most part, it was a very good quarter. I think once you look underneath the hood, I think there is some pockets of strength in loan demand, and you're seeing them steal market share from a lot of their competitors, which is also very encouraging. We saw that on the investment banking side, where they moved up in M&A deals, and we saw that just in retail banking and growth in deposits, too, which is very encouraging. So it's a good market for JPMorgan. They're well positioned either for a robust economy here for the remainder of the year,
right,
or if things deteriorate a little bit, too, they're going to do just fine.
Also a good market right now for the capital market sensitive financials?
Yeah, I think so. Well, based on what we saw today from JPMorgan, I think we'll get a good report from Goldman Sachs on Monday. But that's going to trade more on the outlook more than as opposed to the trailing number. We've had 2 years of robust capital market conditions. It'll be interesting to hear from Goldman if they suspect that's going to continue for the remainder of 2011.
Is JPMorgan at this point in a good position to pick up any market share in most of their businesses?
Yeah, I mean, if you break it down business by business, this bank is very well positioned. The stock trades at 10 times earnings. It's got a 2% dividend yield on its way to 4%. They're buying back stock, which tells you they're very comfortable with their capital levels. They're going to be investing more and more in their businesses alone. They're going to be going overseas. They're in a great spot for the rich to get richer, and I suspect market share gains are a big part of that.
And Mr. Fitzpatrick, in our final 30 seconds, any flight to quality, is that going to benefit JPMorgan as well?
Yeah, the quality trade, folks are probably getting tired of hearing about that, but the truth is, QE2 is going to end here in a couple of months. A lot of the policy programs are expiring later this year. I think that's when that quality trade turns on, and I don't see why JPMorgan wouldn't benefit. They don't need the extra liquidity that's been out there. They're fine from a capital perspective, so they'll be a winner at that point.
Bill Fitzpatrick, senior equity analyst, Manulife Asset Management, joining us from Milwaukee. Mr. Fitzpatrick, thanks so much. Appreciate it.
Thank you.